Hello everyone and welcome back to my final morning report chart proposal on Monday the 2nd of March with me, Rich Perry, market analyst at Handtech Markets. I'm going to look at gold, and this gold chart is increasingly interesting, I believe. Okay, there's a lot of conflicting signals that we're getting now from this gold chart. First of all, we're still in the downtrend that's been since, well, for the past 5 or 6 weeks now. And the question being, are we just rallying within this downtrend, or is it something more? You look across these momentum indicators, they're starting to pick up. The Stochastics have confirmed a positive buy signal. The MACD lines are close to a crossover, and the RSI has also picked up. However, this 61.8% fib level remains sort of a resistance area, you'd argue. And what I'll show you here on the intraday hourly chart is the prospect of a base pattern. 1223 around that area, 1223.10, but we had a high of 1223.20 today. If I can get the crosshairs on it, but anyway, had a high of 1223.20 today, and we've now pulled back off that. And I've been saying that 1223 is basically the reaction high within the downtrend, the first reaction high within the downtrend, and we haven't yet moved above that. And if we do start to move above that and confirm a move above that, then it improves the possibility of this being a base pattern. And certainly if it started to find support above 23.10, then yes, I think you can start to think about this being a base pattern. But at the moment, we're still underneath it. You're also, if you look on the daily chart, you'd argue that this reaction high here from the 16th of Feb is the first real reaction high that you'd get. You did get a slight bounce high there on that 1223.10 high, but I'd still say that would be your confirmation move, 1236.50. You've got the downtrend that today comes in at 1234. So this could still just be a rebound within this downtrend phase, but you've got a series of these candlesticks that are not really overly positive. You have these intraday moves that the market tries to push higher and then fails. And look at this at the moment. We're almost trading back towards the low of the day now, not too far off it. So the bulls are being held back, and there's no real conviction in the move yet. So it could still be that this is a recovery or a rebound within the downtrend, and I wouldn't be backing this as a base pattern quite yet. Also for the fact that we haven't even completed it yet. But if you did see it move above 1223, and I'm just not confident in this one yet. I think the bulls have got to do a lot more to justify this as being a pattern that we'd be backing. And certainly coming still within this downtrend, I'd be all rather wary of it. And so yeah, lots of conflicting signals really. In terms of supports, you're looking out for this 1204 mark, which was the low on Friday, and that sort of comes in above that 1190.90 support that we saw at the front end of last week on Tuesday. But certainly at the moment, we're still in this sort of choppy recovery phase, and there's no decisive move yet. But in the last few hours, we've seen the gold price start to fall away again, and that once more sort of leads me to question how much in control these bulls really are in this move. And I think it's just still going to be a bear market rally within the downtrend. Anyway, I wish you good luck in your trading on gold today, and I'll speak to you tomorrow. Thank you.